I wanted to talk about some of the things that have happened at Hasbro and Wizards of the Coast recently. Now, Hasbro is a toy and gaming company. Most people are familiar with that. Less people are familiar with Wizards of the Coast, which is a primarily gaming company with two marquee games, Magic the Gathering and Dungeons and Dragons. Some people may very well be familiar with those. This is a discussion of the business of Hasbro and Wizards of the Coast, and not a deep dive into those games, because I'm kind of interested in some of the things that have happened. And just to give you an idea of my background, so that you can get a sense of my understanding or lack thereof, I've taken introductory business, finance, and economics courses in high school and college. I've watched TV shows, movies, documentaries, read books, as well as several articles, and watched videos about those things over the last 30 years. I've been very interested in this stuff since I was a teenager, and I worked for several small and large corporations in middle management, mostly in market research and security. Briefly, I worked as a headhunter and made connections with many executives. All this gives me a certain perspective, which is a slightly less than superficial view of how these things work. And no one should take what I say as definitive. This is just how I see it. Also, since this is technically my first real YouTube video, no one's really watching anyway. This is all to say that the vast majority of YouTubers have no idea how these corporations operate. So no one should take the suppositions or predictions we make too seriously, because all of us could be way off. Also, viewers themselves should not assume that they have any idea how this stuff works either. It's all just supposition. What a lot of people who don't really concentrate on how corporations work, they view them in the superficial view that and the terminology that people use today is that they are geared to short-term profits because they have investors, and those investors want short-term profits. And that is certainly a major consideration of investors and a major consideration of the company, any company that you're talking about. But it's not the be-all and end-all, and it may not even be the primary driver of the corporation, because every single one of these corporations is a man-made organism filled with people, all with goals that don't necessarily align with just short-term profits. Most people in their lives, and this includes investors and employees, and also anyone in any class, whether that's middle class, upper class, and the lower classes, they desire stability, mostly. Some people thrive in chaos, but most people want stability. Meaning that stability and a steady as she goes attitude often is found as the primary driver within a corporation. If it's not broke, don't fix it attitude. That can be found there. And sometimes corporations can stagnate because of that. But also, if they're only concerned with short-term profits, they can be volatile, meaning that they could certainly increase their profits by 50%, but they could also decrease their profits by 50% because they're taking risk. So, depending on what the investors want out of a corporation, will often depend on how the corporation acts to some degree, but also it's the people running that corporation, the employees, that really drive that corporation. You can't force people to be a certain way, because eventually they'll buck against it and move somewhere else. And also the investors mostly are investing for the long term because they have a legacy that they're looking to build upon and protect. And most of them want to retire on increased earnings. And high volatility could reduce the chances of those increased earnings over the long term because the corporation could go belly up. So I just wanted to get that out of the way because often when people talk about what Hasbro and Wizards are doing, they talk about the companies as if all they care about is short-term profits. And I'm just saying that, yes, they care about that, but they also care about other things, and it's a whole bunch of individuals who have desires and goals that don't necessarily line up with short-term profit as the only driver. So to give you a little bit of history, Hasbro acquired Wizards of the Coast, the company that makes Magic the Gathering and Dungeons & Dragons, in 1999. It had run it as a subsidiary, a separate legal entity, for the last 22 years. And on February 25th, 2021, Hasbro announced that they were reorganizing the company into 3 divisions: consumer products, entertainment, and Wizards of the Coast and digital gaming. The consumer products division would handle Hasbro's traditional toys and games, while the entertainment division would be responsible for the company's film and television content. Wizards of the Coast's new division would continue to make Wizards' existing games, like Magic the Gathering, Dungeons & Dragons, and they would lead an aggressive digital transformation of those games and license Hasbro gaming IP for other digital products. At the time, Wizards had experienced a decade of growth that saw their annual profits grow by 400%, and the CEO of Wizards explained that the growth of the new Wizards of the Coast and digital gaming division would be powered by 5 engines: tabletop innovation with Magic and D&D, digital versions of Magic and D&D, a new IP pipeline, new sales channels, and digital licensing. The CEO said that Wizards was building a robust new IP pipeline, hiring key talent from Ubisoft, BioWare, Warner Brothers, and Disney to explore fantasy-adjacent games like sci-fi, action, horror, and collectibles. In early January of 2022, Brian Goldner, the CEO of Hasbro, passed away, and Chris Cox, the aforementioned CEO of Wizards, who is now president and COO of Wizards of the Coast and digital gaming division, was tasked to become the new CEO of Hasbro. Chris originally came from Microsoft 6 years ago, where he was vice president OEM technical sales. And prior to that, Cox was the vice president running the company's $250 million learning games unit, and during an earlier period as group product manager at Microsoft Xbox, where he led portfolio planning and go-to-market strategies for the company's action games. This led many to speculate that Hasbro was focusing on digital gaming, but a quote from that time from the chair of the board of directors said that it was Chris's omni-channel experience and proven track record that made him the ideal leader for Hasbro as it continues to become the world's leading play and entertainment company. As well, Hasbro has repeatedly said that video games are the future of WOTC. So, within the Magic community especially, to some degree those that play Dungeons & Dragons as well, there's been a lot of concern that Hasbro was going to pivot to digital only, that there wouldn't be physical products to buy, and they love their physical products. And one of the reasons that they love their physical products, beyond that it's tactile and that you sit around a table and play it as opposed to sit in a chair with a headset on and play with someone across the country, is that you play it with your friends around a table, but also you play it at a game store with strangers who may very well become friends, meaning that you can meet new people through these hobbies. Now, I'm not sure that many people are familiar with these game stores. They range in size from very large and diverse game stores that also sell board games and other gaming adjacent products. And some of them are tiny stores that simply sell Magic the Gathering product because for a time that was profitable all on its own, just selling Magic the Gathering cards, singles and sealed product. So the individuals within these communities, almost all of them agree that they enjoy these stores existing, and they enjoy going to these stores and playing their games at these stores. So they're wary of a focus on digital gaming and digital environment building because they think that the physical aspect could disappear and these stores could disappear, and an avenue for meeting new people and socializing could disappear. Now, when Chris Cox was appointed as CEO of Wizards, when he was appointed the new CEO of Hasbro, having previously been the CEO of Wizards, Cynthia Williams was appointed as the new president of Wizards of the Coast and Digital Gaming division in early February of 2022. I was surprised that I didn't see any of the leading Magic the Gathering YouTubers make videos about this as it happened. Only one of the leading Dungeons & Dragons YouTubers talked about it, and that was Professor Dungeon Master from Dungeon Craft. Cynthia came over from Microsoft, where she had been a GM and vice president in various areas within its Xbox division since 2018. Most recently in the gaming ecosystem commercial unit. And previously, Williams had spent 11 years in Amazon's finance and fulfillment departments and more than 12 years at a Richmond, Virginia-based tobacco company, Altria. Hasbro simultaneously announced that it had hired Tim Fields, who would report to Cynthia as the Senior Vice President and General Manager of Digital Gaming. Fields was previously the CEO of the mobile gaming studio Kabam Games, producers of Marvel Contest of Champions and other AAA games. He was also previously a director, designer, and executive producer at Capcom in Vancouver, Certain Affinity, Electronic Arts, and Microsoft. Chris Cox said that he was excited to partner with Cynthia and Tim, working together to deliver across the brand blueprint and activate their significant investment in the business to become the world's leading fantasy-inspired gaming publisher on all platforms. Chris Cox also said that Cynthia brought a deep understanding of technology and e-commerce, along with cloud and console-based gaming. She had a proven track record across both Microsoft and Amazon of scaling businesses to drive profitable growth, and her experience was highly complementary to Tim's, who brought to Wizards unmatched production experience and a demonstrated ability to accelerate the growth of brands in mobile gaming. This, to me, was a clear signal from the company that they were focusing their efforts on digital entertainment, but also because Cynthia worked on Fulfilled by Amazon, her experience in this might signal an even deeper involvement in the direct-to-consumer activities by Hasbro. Now, the direct-to-consumer activities are another concern for the community because the game stores that they care about work on, the age-old model of buying product from distributors, and those distributors acquiring that product from the manufacturer, in this case, Hasbro. So, if Hasbro moves to direct sales, meaning they sell through their website, or Magic the Gathering sells a product called Secret Lair through a fulfillment website that does direct sales to Magic the Gathering fans, and it does those activities through the website and for a limited period of time. And they also have started selling or sending more product to Amazon. The concern is that if these game stores are getting product at the same price that Hasbro is selling the product through their direct sales, then, or even if the direct sales are undercutting the stores, then these stores can't sell the product because people will prefer to go to where the cheaper price is. Although this kind of reminds me of when people were very concerned that Magic the Gathering was going to be sold in Walmart and Target. And they felt that, Walmart and Target, being these giant companies, would outcompete all the local game stores and no one would buy product from them. But from my experience of going to various stores in the United States and Canada, Walmarts and Targets, the prices in Walmart and Target is not below the price that most game stores can sell these products at. So, in fact, it's often the case that you can get these products cheaper at game stores. Now, Hasbro credits Cynthia Williams with driving the expansion of Xbox gaming and the acceleration of game creator growth. And if I take that idea and combine it with the opening licensing systems that Dungeons & Dragons had been using, and compare those with the ecosystem on Xbox Live, to go back a step, the open gaming license from Dungeons & Dragons was something that was developed in the early stages of the acquisition that Hasbro, that Wizards of the Coast made of the original company that made Dungeons & Dragons. So, at the end of the 90s, beginning of the 2000s, Wizards of the Coast put out a new Dungeons & Dragons product and created the open gaming license, the D20 system it was called at the time, and I'm not sure if they called it the open gaming license, but that's what it's called now, and it's effectively the same thing. Basically, it means that there's a large chunk of the game, the basic Dungeons & Dragons game, that is sort of a free-for-all for anybody to use, both personally and commercially. So, Wizards of the Coast will not aggressively protect its copyrights on that portion of the game so that other people can create their games based on that portion of the game. However, there are other things within the game, the more advanced and the expansions of the game that Wizards does protect with copyright, and at this time, to produce your own content for Dungeons and Dragons using the stuff that isn't copyright protected, you simply have to reproduce the language of the open game license on your product. And this idea came from the 90s with freeware, which was a type of software that people would put out for free using revenue models that were different than the aggressive protection of copyright and preventing other people from distributing your product. So the idea was that copyright was an oppressive force on new ideas and innovation. So, again, I'm comparing the open game license to Xbox Live, and I remember back in around 2007, 2008, when Xbox Live became a very interesting place for independent games. Now, I think Steam also started to run with this, but I remember it first being a robust place for independent games on Xbox Live. Maybe it's just because I was playing Xbox Live more at the time than I was PC games. But there were a lot of amazing new independent games, and that has only continued on to this day, and there's lots of great success stories of independent games. When previously, to get a good game, you kind of had to get it from a game studio that had a lot of money backing it. Whereas with the independent games from 2008 on, someone could spend an entire year of their life creating the game themselves, and it was possible that they could make a lot of money selling this game. So that's kind of the reason I'm comparing the open game licensing with the Dungeons & Dragons open game license with Xbox Live, because I could see a future where Dungeons & Dragons players, and maybe even Magic the Gathering players as well, could create their own gaming ecosystems within the digital environment hosted by Hasbro. These ideas especially ring true when you add in all the recent hype around metaverse assets. So it's possible that Hasbro is planning its own section of the metaverse, and for example, it could take the form of a digital environment framed by the rules and design of Dungeons and Dragons, wherein players can create their own play groups using tools supplied by Hasbro. This could be something like the modding groups in other video games, but if supported by Hasbro, could turn into a more immersive experience where each group of player who sits down to play Dungeons and Dragons has their own modded bubble within a system. And if you're not familiar with how modding works in games, there are certain games like, say, Skyrim, where individuals can go in and change art assets and story aspects and maybe even the combat system or movement system of the game, and they can change it into either something like an expansion on the game or an entire new game itself. And I could see something like this working really well with a digital version of Dungeons and Dragons by having Hasbro create a digital system, an environment that uses the Dungeons and Dragons engine, and then individuals could shape their experiences around that engine using the system, adapting the system, and also using art assets that are supplied by Hasbro, and even being able to create their own art assets and port them in. The idea is that it would be the first time that Dungeons and Dragons has truly become digital, because if you go back into the early history of the game and the current history of the game, every single play group is playing a modded version of Dungeons and Dragons. Even if they're playing with official books. So, to give you an idea, when you're playing Dungeons and Dragons, you're playing within a campaign. And the campaign is a geographical setting for where your players are. And it can have its own history, it can have its own unique physical aspects, it can have its own races and cultures and that sort of stuff. And even when you're playing with official books, which have their own campaigns that are put out by the company, and the designers at that company have, described the geography, the empires and the communities and the culture and that kind of stuff. Even when you're using the official sources, the players themselves are adapting it as they play. And so no one is playing the exact same thing, and no one is having the exact same experience on Dungeons & Dragons. So, going back to the digital space, it makes sense that to get to a pure form of Dungeons & Dragons digitally, it's not the video games that have been put out so far. They're sort of a shadow version of what Dungeons & Dragons truly is. What you need is the ability to mod the experience to shape it to your play group, and, as I said, create your own digital ecosystem within Hasbro's digital ecosystem. I don't know if that's actually happening. I assume someone is thinking about moving us towards that. I would have thought it would have happened sooner than later. I mean, I can conceptualize the idea in my head easily, but I don't know why no one else has attempted it yet. Maybe it's just too costly, and maybe I don't know why they don't necessarily see it as being highly profitable, but maybe it's being worked on in the background. There's just a lot of kinks to work through. I don't know. So I think these moves are also about Chris Cox, the CEO of Hasbro, expanding his role to drive the rest of Hasbro to the level of success that he brought to Wizards of the Coast. It might even be that his initial role as Wizards of the Coast CEO was a test by the board to see what he could do with the company before they gave the reins to him. If this is the case, what he set up at Wizards of the Coast is the plan moving forward, and Cynthia Williams is meant to continue shepherding that plan forward. It's possible that the board would want Wizards to stay profitable but stable, while Chris could shake up things at the rest of Hasbro. Given this line of reasoning, there may not be any big changes at Wizards like there have been in the past few years, and it might be steady as she goes. So to give you an idea of some of the changes at Wizards of the Coast, it's basically a lot of product and price increases. And of course, the community themselves are very concerned about how much more each individual product is costing them, but they become increasingly concerned because there's more and more things being put out. So to give you an idea, the core of Magic the Gathering for decades was the booster box, which is a box of usually 36 boosters, which usually have 15 cards in them, and they're all randomized, and then that's where the idea of the rarity comes in. You're likely to get commons, uncommons, and then maybe a rare or two, and a mythic. The point is that 3 to 4 sets, which are expansion sets, which now take place in these different worlds within Magic the Gathering, these sets would come in blocks, and you might get 3 of them a year, and maybe all 3 would be in one world, but lately now each set has been in a different world, but they've also increased the number of sets. So they've increased the price, and they've increased the number of sets. So now instead of 3 to 4, it's 5 to 6 sets. And then there's also specialty sets, which usually are double the price of the normal sets. And in addition to that, it doesn't just stop at there being more sets and therefore more booster boxes. There's more types of products within the product line. For a long time, there have been pre-release packs, which are basically a smaller number of boosters, so that when the set comes out, people go to the store, they play, and they try out the set. And then there's bundles, which are about or a third or a half the size of a booster box. Those have been around for a while. But now there are set boxes and collector boxes. Set boxes are about $10 more expensive than the normal booster boxes, and they have a different number of cards in them. They have less boosters and less cards, but they have a greater chance of better rarities and neat little things inside. And then there's collector boosters, which are double the price because they're mostly foil and they're mostly premium versions of the cards. And then you have other products, including commander decks and other pre-constructed decks, and then the secret layers that I had mentioned before. And it's a lot of product, and I understand why people are very concerned, because it's possibly quadrupling the amount of product that's out there. And maybe if in a given year, say back in 2016, you were to buy one of everything that Wizards of the Coast had put out for Magic the Gathering, let's say you were to spend $1,000 on that. That amount could very well now be $3,000. I haven't bothered to calculate it, but I don't know. I would say it's at least $3,000. It could be as high as $5,000 instead of $1,000 for let's say if that was the amount you were going to spend for the entire year on Magic the Gathering, if you were to get one of everything. So that's one of the reasons why people have become concerned with what Wizards of the Coast has been doing in their profit margins. And it makes sense why they think that Wizards only cares about short-term profits, and why they think that the investors only care about that. However, it's possible. I don't know that it's more likely, but I think it is possible that the board put Chris Cox in charge of Wizards of the Coast to see what he could do, and he drove profits, and he shook up that company, and he created something that is a huge engine within Hasbro. And now they're going to have him do the same thing at Hasbro. And maybe Cynthia Williams, her main task is to continue what Chris had initially done, and then add in her own specialties, which is the Amazon fulfillment and the Xbox Live stuff. That's just my speculation. So to add a third thing into this, it was the beginning of the year when Chris Cox became CEO of Hasbro, and then a couple weeks later, Cynthia Williams replaced him as CEO of Wizards of the Coast. And then, about 3 weeks to a month ago, this Alta Fox Capital Management, which I don't know how many people are involved in Alta Fox Capital Management. It could just be one person. But they're the largest shareholder at Hasbro, and they want to add new members to Hasbro's board. They're an activist investor, and they own 2.5% stake in the company, worth around $325 million. And that is the largest stake in the company. Hasbro said that it has met with Alta Fox and plans to review its nominees in due course. And the investor is urging the company to replace its brand blueprint, which was set up by the previous CEO. The brand they want to replace the brand blueprint strategy with a plan that focuses on growing profitability in its consumer products and entertainment divisions. The blueprint strategy uses storytelling to drive sales. Under Goldner, the previous CEO, Hasbro successfully grew beyond just toys and games and into the television, movies, and digital gaming space. And it uses its toy brands like Transformers and My Little Pony to fuel entertainment content, and then that entertainment content to fuel sales of toys. The company is currently producing a Dungeons & Dragons movie and a television show through E1. Alta Fox said a spinning off of Wizards of the Coast and digital gaming, which includes franchise brands like Dungeons & Dragons and Magic the Gathering, would simplify the company's corporate structure and unlock as much as $100 a share in additional value. Alta Fox posted on its website that they believe Hasbro Inc. is severely undervalued to its ineffective brand blueprint strategy, flawed corporate structure, and consistent misallocation of capital. So the idea, from what I can gather, and I'm not an expert in this at all, but Alta Fox believes that if they took Wizards of the Coast and made it a separate company from Hasbro, I assume at that point Hasbro's share price would go down because it's lost its most profitable portion. But that would shake up the company enough to make the changes that Alta Fox Capital wants to make. And their main concern is that the current board members are overpriced, meaning they pay themselves too much. And that, to the investor, leads to a sort of form of corruption, meaning that the company, Hasbro, isn't agile enough and doesn't do the things that need to be done to drive their profit, because the board members are holding them back because they are absorbing most of the value from the company, or too much of the value from the company, because they are complacent. They don't want change because they don't want to lose the massive value they currently get. This makes the company stagnant. Now, when I was talking earlier about different Magic YouTubers, I had mentioned that they hadn't really commented on the new CEO of Wizards of the Coast, Cynthia Williams. So, for instance, there's a YouTuber called The Professor at Tolarian Community College, and he's a large Magic the Gathering YouTuber, and he's not made a video to date on any of this stuff at Wizards of the Coast. Not that I expect him to, because his specialty is mostly in the products that Wizards of the Coast makes for Magic the Gathering, and also the other products that other companies make that help you store and preserve these very expensive cards. So he doesn't often talk about the corporation unless it's in relation to how much things cost or the quality of the product being put out. But Alta Fox Capital Management has referenced him on their website, freethewizards.com, under the players section, proving that his voice might be the most significant among the player and fan community. So it seems at some point in the future that shareholders may have an opportunity to vote on the board of nominees put forth by Alta Fox. And if I was to guess, I'd say that their plan to split the two companies isn't likely to happen, and may not really be the most important part of the plan. It might be that what concerns shareholders most will be the supposed bloat and inefficiencies at Hasbro, and refreshing the board with new ideas and a plan to streamline the company might be what's needed. So if this is the case, I'd say they could very well increase share price, maybe even double it within 5 years. But I'm not really an expert in that. Now, someone who is sort of an expert in that is Rudy from Alpha Investments, who's another Magic the Gathering YouTuber. He mostly comments on the finance of people investing in Magic the Gathering, because that is something people can do, because these products increase in value over time, and so they are an investment vehicle. And Rudy, to him, they are his favorite investment vehicle because he loves the game and he also loves investing. And he mentioned that some Fox Capital shareholders had contacted him with screenshots, and that they wanted to bring in someone named John Finkel, who is a decorated champion of the Magic the Gathering pro scene, and they also wanted to bring in other Magic alumni. Now, the Magic the Gathering pro scene is basically throughout the history of Wizards of the Coast and Magic the Gathering, they have created a professional tournament scene in which eventually, after like the first 10 years of the game, so for the last 20 years, very large prizes, from what I remember, upwards of $50,000 and $100,000, and then other prizes throughout the year in the professional tournament scene, meant that this Magic the Gathering was the premier game to play. I mean, it was up there with poker in terms of, well, maybe not. I'm overstating the case, but I mean, you could make a lot of money playing Magic the Gathering, and John Finkel was a decorated champion in that scene. So Rudy also reminded his viewers that there had previously been rumors years ago that Hasbro was planning to sell Wizards, but those things never really happened, and this is the first time that the idea of a Hasbro Wizards split has been supported by actual investor actions. Rudy expects a Wizards of the Coast listing to have a price-to-earnings ratio of 50 in this overpriced market. So from what I understand of price-to-earnings ratio, basically, it's the number of years it would take to recover your initial investment. So if you invested $1 in a company and it had a price-to-earning ratio of 8, it would take 8 years to recover that, because the earnings that you can make from, I guess, the share having gone up, or also the dividends that you receive, means that a PE ratio of 8 would take you 8 years to recover your initial dollar investment. So a PE of 50 is pretty high. It would take 50 years to recover a dollar investment. But in this current marketplace, all the price-to-earning ratios are apparently extremely high. And from what I understand, it's a little bit out of control. But that's not really Hasbro's fault. So for a Wizards of the Coast listing to have a price-to-earning ratio of 50, that would just be the norm, I guess. And he says that because Hasbro on its own has little growth, although good assets, and Wizards has lots of growth, and it just means that Hasbro is seen as boring, and Wizards is seen as exciting, but because Hasbro owns Wizards, it's just a boring stock. So by putting Wizards on its own as its own stock, it would get a higher price to earning ratio. But Hasbro doesn't get to realize that PE ratio because investors treat the stock as flat. And the new Wizards CEO was brought in under the replacement of the old CEO who became the CEO of Hasbro. And there's probably some plan to utilize her skills based on the resources of Hasbro. Spinning of the company might change the equation in the plan. So, as an example, the movies and TV projects are likely based on Hasbro connections to Hollywood, and people within Wizards might not have the same connections or ability to access Hollywood and make deals. In addition, the rights issues may make it very difficult to break up the companies because the deals with Hollywood are likely with Hasbro. There might be ways for those deals to be broken if the rights transfer to a new company. So at least in my head, it seems that if you're going to abandon the blueprint, Alta Fox wants to abandon the previous CEO's blueprint, which was a story-driven synergy within the company, and they had put out all these feelers and made all these plans and signed all these contracts. Alta Fox's plan could eliminate all of those, and I think Alta Fox has mentioned that they don't like the plan, so maybe they don't care that they're ending all these things, or maybe it might be that these things would continue on regardless, or they would find a way to work these movies and TV shows and other IP crossovers into the split of Hasbro and Wizards. But from where I'm sitting, I kind of want to see new Dungeons and Dragons movies, new Dungeons and Dragons TV shows, Wizards cartoons, crossovers between Magic the Gathering and Dungeons and Dragons, and I kind of like both of those universes, and I want to see them in other media. Now, what I had noticed was, well, I guess it's not surprising, but maybe it was surprising to me because maybe it's because I'm more into Dungeons and Dragons than I am into Magic the Gathering. But I assume that things like G.I. Joe and Transformers were even more mainstream than Magic the Gathering was in comparison to Dungeons and Dragons. But if I look through Forbes, which I did, I looked through quite a few different articles, and Forbes came up quite a bit. It covers a lot of Wizards of the Coast products, but it almost never seems to cover Hasbro products in comparison. So it's kind of surprising to me that Forbes is aware and covering Magic the Gathering products, but isn't really talking about G.I. Joe, Transformers, the things that everybody knows about. And from my perspective, almost nobody knows about Magic the Gathering. So I just thought that was an interesting fact to bring up. And another one was when this Alta Fox Capital situation came up, and people talked about the 2.5% ownership. Obviously, when most people think of companies, to think of being able to control a company or make it do what you want, most people assume you need 50% plus one of the company's shares to be able to do that. But that's not necessarily the case. Often, what would be considered minor, or what people would consider minor shareholders at like 3% or 4%, those people can drive change at companies as long as they can convince other people. Like, for instance, you have 3% of a company, you need another 47% to basically have your way with that company. So if there were, 24 other people that had 2% that you could convince, then you now have 50% plus one and control of the company. But it doesn't even need to go that far. I mean, if you could get people that collectively, as a conglomerate, have 30%, they still have a much larger voice than everybody else, and others will just kind of, go along with them. And also, not every shareholder, even people that have voting shares, bothers to vote. And when they do, sometimes they just vote with whatever the major shareholders think. And it just made me think of, Disney, because it was when Disney bought Lucasfilm, that made George Lucas part of the deal that he got was Disney shares, and that made him the second largest shareholder as an individual at 2.1%, which is kind of comparable to Alta Fox's share of Hasbro. The largest individual shareholder is Lorraine Powell Jobs. Lorraine Powell Jobs, Steve Jobs' widow. She has 4%. What's interesting is that her 4%, which came from Steve Jobs' 4%, came from Steve Jobs selling a company to Disney, and that company was a company that George Lucas had started when he was trying to make cartoons in the 80s, which eventually became like the Droids cartoons and the Ewoks cartoons. So it's interesting that if George had kept that company, then he would have had 6.1% instead of his 2.1%. Now the actual largest investors in Disney are the Vanguard Group at 7.58%, BlackRock Fund Advisors at 4.1%. But I just find it interesting that George Lucas's stake in Disney is similar to Alta Fox's stake in Hasbro. And, if I take the idea that, Alta Fox can be an agent of change for Hasbro, then George Lucas could very well, maybe he can convince the Vanguard Group and BlackRock Fund and Lorraine Powell Jobs that maybe he should run Disney. Maybe that's something that might happen in the future. Maybe he decides he doesn't want to retire and make secret movies that no one ever sees. I just thought that was interesting. Now, recently, CNBC reported that Hasbro and Mattel have different outlooks on the market moving out of the last 2 years. Hasbro takes a much more conservative view and expects much less growth than Mattel does. Analysts have speculated that Hasbro may be intentionally setting its goals low for the next few years as Cox settles into his new post, which I guess kind of coincides with what I was saying about Cynthia Williams being, steady as she goes. And going back to CEO Brian Goldner's diversification strategy, Goldner, who died October 11th, 2021, after a long battle with cancer, outlined a blueprint for the company that I've mentioned before. It was designed to transform it from a toy manufacturer to a fully integrated entertainment, gaming, and consumer products company. Hasbro's third quarter results reported in October of 2021, with entertainment revenues up 76%, provided the best indication yet that Goldner engineered a winning strategy for the company. Hasbro detailed how it's leveraging entertainment properties like Transformers, PJ Masks, and Peppa Pig to directly boost store sales, and how it's turning toy brands like My Little Pony into entertainment properties. The company's Wizards of the Coast and digital gaming division, which includes Magic the Gathering property, also saw strong growth, with revenues up 32% to $360 million and operating profit up 13%. $100 million in unfulfilled third quarter orders caused consumer products revenue to decline by 3%. The majority of those missed orders all were delivered during the current fourth quarter, Thomas said. In September, Hasbro shipped the most volume domestically ever in a single month, Deborah Thomas, Hasbro's CFO, had said. So, I didn't think this before, but Wizards of the Coast is the major sales engine for Hasbro, and profit engine, definitely. And a lot of the Magic YouTubers that I had watched up until this point had kind of said stuff like that, but I just couldn't see it because I always thought of Hasbro and the brands that it had, like Transformers, G.I. Joe, My Little Pony, as being way more mainstream and therefore way more profitable, or at least have way more sales than Wizards of the Coast. But that doesn't really seem to be the case. So, for instance, Wizards of the Coast revenues passed $1 billion for the first time in 2021. And Wizards of the Coast booked $952 million in tabletop game sales in 2021. Hasbro has not previously revealed how much of the segment's sales were digital and how much were tabletop. In a conference call, interim CEO Rich Stoddard told analysts that tabletop games accounted for 74% of the $1.3 billion in sales for the segment in 2021 and grew at a blistering 44% rate. Wizards of the Coast and Digital Gaming segment reported an operating profit of $547 million for the year, accounting for 72% of Hasbro's total company-wide operating profit of $763.3 million. Hasbro reported $6.4 billion in total revenues for the year, up 17% from 2020. Net earnings were $428.7 million, up 93% from $222.5 million in 2020. Hasbro's toy division remains 62% of its revenue, or about $3.98 billion in 2021. Growing in significance, however, is Wizards of the Coast and Digital Gaming, which accounted for $1.28 billion in revenue, or 20% of the company's total revenue. Entertainment was 17.9%, or $1.15 billion. Hasbro's toy division remains 62% of its revenue. Wizards of the Coast Digital Gaming segment account for 72% of the total company-wide operating profit of $763.3 million, as I mentioned before. So without digital gaming, Wizards of the Coast is responsible for somewhere around half of Hasbro's profit, whereas the other portion, the toy division, is 62% of its revenue, but not half of its profit. It's somewhere around 30% of its profit, which is fascinating to me, and it was something I wasn't really expecting. So to sum everything up, early this year, the CEO of Wizards moved over to become the CEO of Hasbro. A new CEO was brought in from outside, along with a vice president, to run Wizards of the Coast. And Wizards of the Coast and Hasbro have been moving in this direction of IP synergies and digital growth. And I'm kind of hoping that that digital growth includes a digital ecosystem in which we can mod Dungeons and Dragons like we do in the pen and paper form. Meanwhile, a activist investor thinks that Hasbro is bloated and needs to be streamlined, and to do this, they need to make Wizards of the Coast a separate company, which is fine for me as long as, I get the things that I want. And hopefully that doesn't affect, the IP synergies going forward and the idea of this digital environment, because these are things that I'm looking forward to. Of course, I have no say in the matter because I'm not a major investor in Hasbro. I don't have a single share in Hasbro. Maybe one day I will. But the results so far are just this upcoming meeting or vote on the proposed board members that Alta Fox has put forth. So I guess we have to wait to find out whether Alta Fox succeeds. Meanwhile, I guess we have to see what Chris Cox is going to do with Hasbro and what Cynthia Williams is going to do with Wizards of the Coast. And I don't think we're really going to see results from this for a year or two, because these companies have certain things that are set in place that are usually, a year to 18 months out, contracts and fulfillment plans and just a lot of logistics. So I guess we're really not going to see the results of this, other than, it could be fairly soon that Alta Fox succeeds or fails in their bid to put on new board members. And maybe if they succeed, we'll see some of their plans start to take start rolling, and maybe start to take effect after a year or two. And if they fail, there may very well be some sort of conflict, and that might be interesting to talk about. But in the meantime, thanks for taking the time to watch this video, and peace out.